Hi, everyone. Welcome to our market update. My name is Vinnie, and this guy will be here.
David Wright, thank you for allowing us into your television.
Into your
computer,
home.
or tablet, or iPhone.
There's a lot of stuff going on there.
Anywho,
we're going to have the clicker below. So if you have any questions, or if you're first time watching us and you're trying to have your chance to win, you're going to want to keep track of those different numbers below. This is our market update. Let's just get into the nitty gritty of it. How are rates looking this week?
That's an amazing question that you asked, Vinny. Well, you know what's more amazing is last Friday, we had a jobs report that was supposed to be around 220,000 jobs. Came in at give me 500 jobs. So it was a massively big explosion in new jobs. But the thing that the Fed is not realizing is full-time employment. What I mean by that is people that work 40 hours is being decreased. And the number of jobs that were created are because people are taking second and third jobs. So if you're taking a second and a third job, would that tell you the economy is doing really well?
Yes, I would think so.
You do?
Yeah, you have more money in your pocket. If you're taking a second and third job, you have more money.
Correct, but you're taking a second and third job because the cost of everything you're buying is so much more expensive. So the part, yes, you do make more money, but do you want to work 2 or 3 jobs? How is your
what are the jobs? Wait, tell me what the jobs are first.
The jobs are basically minimum wage type jobs. So that would mean Vinny decided he's also going to take a part-time job at McDonald's after this podcast because he wants to be a part of the economy and have extra spending money. And then as a third job, he may be an Uber driver. So, maybe realtor, McDonald's, Uber driver. But
I've definitely heard there's more Uber drivers that are realtors out there. Someone actually told me that the other day. They're like, man, I didn't realize how many realtors are Uber drivers also. Anyways,
but the reason why I mentioned that is because, yes, that's great that those jobs are being created. But when you look at a bigger economic picture, it's not good for people to be doing that much work just to make it by. So that's the bad economic point of the story. Now, why do I mention that? Because the more that the economy is kind of moving down and the Fed keeps raising rates, every time the Fed raises its rates, mortgage rates actually come down. And I know a lot of people don't believe that's true, but that's only mortgage rates, not car loans, not credit cards, not lines of credit, not personal loans. All that is going up and up and up. But mortgage rates, long-term borrowing have actually come down. Like your average 30-year fixed right now for a very good borrower with 20% down is like 5.375, APR 5.45. So that's pretty good. And FHA has dipped below 5%, and so is VA. So if you think back, Vinny, a couple of weeks ago, we were all in the 6s.
Yeah.
So it's getting better, like interest rate wise, but I'm still worried about what's going to come in the fall and what's coming in the fall when things are not as good as summer. So
roughly
getting better.
Roughly, what are rates looking when they're 15-year loans? And then roughly what are they looking like when they're 40-year loans?
15-year loans, your average is probably 4.75. That's not that big of a difference between, 5.375 on a 30-year fixed and 4.75 on a 15-year fixed. Because if you think back, Vinny, 7 months ago when me and you were talking, we were doing 15-year fixed at 1.75 and 2%. So, overall, we've been in the game a long time, me and you, and these rates are not that bad. And in a bigger picture, it's still really good to buy a home with the rates the way they currently are. Because
do you guys offer 40-year loans?
Right now, I don't offer them from my company. I actually can source them through a broker channel for a 40-year amortized loan. I do think in the future you're going to see more of those coming around. And you know who actually does them really good is Union Bank. Union Bank does some pretty good 40-year term loans.
Interesting.
Yeah, but you have to be perfect borrower, 740 FICO only, and your loan amount has to be above 649.
All right, let's put David to the test. I'll put all you guys to the test. If you guys have never seen us before, we give your chance to win $50, and we do. With question time. All right, this was the question for last week. How much did the most expensive detached property sell in Bonita so far this year? What's your guess? Bonita, South Bay? What are your thoughts, David?
That's different. Bonita and South Bay is different. Like if you're talking about Bonita, or you're talking about, that's a small niche area with horse properties like Ranchero. I actually love Bonita. I think it's great. I think South Bay is different. So
you're really stretching this out. Let's see your come on. What's your number?
Most expensive detached property in Bonita. I'm going to say this year, 3.1.
2.2.
Oh man,
I know. Giving it away. Okay, we're going to the other direction now. All right, so let's see how David does going the other direction. So instead of going south, we're going north in Vista. So how much of the least expensive detached property sell in Vista so far this year?
SFR,
single family.
I'm going to go 225.
Oh, you'll have to stay to this channel. Subscribe, text below for your chance to win to see if your answer is right. Now, I'm going to go back to we were talking about interest rates and how kind of interest rates are changing a little bit. Here are the numbers below. Nothing drastic has really changed to the market. We did see over the last couple of weeks, we saw basically an uptick in new active properties. We haven't really seen that big of an uptick over the last week or so, last 2 weeks or so. So that kind of feels like it's balancing out a little bit. We'll see how long it takes for that to actually happen. But I think it probably helped too when you had rates kind of do a little dip, kind of help people. Because what we were talking about at the high end, what was the high end a couple weeks ago of interest rates?
Oh man, we reached up to like 6.5, 6.625, but those were for perfect borrowers. See, when you're saying interest rates, you have to realize if you're not talking about somebody with a 740 FICO, 20% down, and below a loan amount of 649, that's your best interest rates. So, but 6 weeks ago, that perfect borrower, we're still at 6.5, 6.65. So we've come down a lot.
What's so you said 745?
What's that? I'm sorry?
745 was the FICO?
740.
740.
740 is our magic number. Like we want, when you get the best interest rates, it's for people with FICO scores above 740.
All right. So, and again, if you're not looking to buy today, but you're looking to buy in a couple of weeks from now, that could be a very big help to sit down with a lender like David, just give you, insight of how you can better your credit score, your FICO score. So then when you do look to purchase, that it's going to be more palatable for a better interest rate. And if you're on the edge of it, yes, what you're going to find on like Credit Karma and those platforms, those numbers are going to be a little inflated. So if you're in that ballpark of the low 7, the mid 7, you probably still want to talk to a lender like David to make sure that you're going to get the best rate possible when you're ready to purchase. And if you're looking for creative kind of ways to purchase, now's the time. Any last words that you want to throw out there, David?
I would tell people out there, if you're looking